Alright, perfect. We are live on YouTube, so
Beautiful.
let's go ahead and get started. Very first thing, I want to make sure that the YouTube is working fine. If there's
Yeah,
anyone who can, let me
of
know.
course. How do you while we're doing that, how do you like your computer when it comes to streaming on YouTube? Do you find it's laggy at all, or um,
I
y-
like the Windows one much better than the MacBook, personally.
okay, okay,
And my Windows is a desktop too, so it's just a lot more convenient. Just so I can have
okay,
YouTube on one screen, and then I can also have, like, trading and all that on the other screen.
of course. Do you have 16 gigabytes of RAM, or would you say you have 8?
I believe I have 16.
Okay,
Yeah,
yeah, that's what I need. I'm just listing my computer. I'm gonna buy a new one.
that's perfect. Do you know which one you're looking into?
That's not my wheelhouse.
Oh, okay.
I'm still watching YouTube videos, trying to educate myself on it.
Yeah.
And I just if you know anything about computers, that'd be awesome. But
Yeah, for sure. I'll send you some recommendations after we're done here.
I appreciate it. Yeah, something fast, something typically for gaming or not that I game, but it's for trading. But
Yeah.
like streaming and stuff like that. Something
Yeah.
that's just fast and has a lot of memory on it.
Yeah, for sure. I'll send you some recommendations
This
after we're
thing's
done
getting
here.
older. Okay, appreciate it.
Yeah, for sure. Alright, let's go ahead and get started here.
Yep.
Let's start off with some articles first. So what I want to do is start off with the UK here, so we know that they have, like, some elections going on, and then they have their front runners and everything, and it seems like Liz Truss is pretty much one of the front runners here, getting ready to take over the office this upcoming week. So definitely expecting a lot of volatility there. This is going to be very important because whoever ends up coming into the office, whether it's Liz Truss or whether it's Sunak, I believe is his name, whoever it may be, their strategies, their agenda is really going to be very important when it comes to the outlook of the entire UK, right? So if they start doing something like, what Biden is doing right now, for example, which is putting out, like, more money into the economy and just making money a lot cheaper in different ways. So one of them is, like, for example, forgiving all the majority of the student debt, right? And then also putting money in, like, in different sectors of the economy. Just his fiscal policy, when you look at it, it's very accommodative. It's very, like, making money very cheap. And obviously we know that the government and the central bank, they're separate, right? So the central bank and whatever happens there is quote unquote independent for whatever the government is doing. But when you look at this indirect, or this, indirect relationship between them two, the central bank essentially ends up cleaning after the government. So what I mean by that is, we know that a lot of central banks right now, they're increasing rates, right? And they're contracting, they're trying to contract the money supply into the economy. They're trying to move into this contraction in monetary policies and everything like that. But, when you're looking at, for example, the Fed specifically, and then also the U.S. government, when the U.S. government starts coming out with fiscal policies where you start putting money into the economy, when you start making money cheaper, obviously the Fed is going to have to be a lot more aggressive, and they're going to have to find other ways, because whatever the government's doing with their fiscal policies is obviously going to have a rippling effect throughout the industries, the different sectors of the economy, right? And then the central bank is going to end up having to clean after it. So it's independent in the sense that the central bank's not going to listen to, President Biden saying that, hey, be more aggressive or do this, do that. The central bank's going to do whatever they think is fit. They're going to do, they're going to look at the data, and they're going to see whatever are the different approaches that they should be taking in order to control inflation. So they're independent in that sense. They don't take any orders from the government. But when you look at the overall bigger picture of an economy, it's affected by the government, and it's also affected by the central bank. Does that make sense? Any questions? All right.
No.
So that's pretty much, this indirect relationship between the two, the fiscal policies, the monetary policies, and, how does that play out? So it's the same exact thing when you're looking at, UK here, where Bank of England is being very aggressive, right? They're increasing interest rates very aggressively. They're trying to move into these contractionary monetary policies and everything like that. So whoever ends up coming into the office to replace Boris Johnson is going to have to, like, their agendas are going to affect the economy overall too, right? The best case scenario is that the fiscal policy is there from the government's perspective. Whoever ends up coming into the office is also going to be, a little bit aggressive. They're going to be thinking about inflation. They're going to be very cautious of, any new bills, any new laws, any new support that they're trying to put out into the economy. That's the best case scenario. So that way, pretty much both parts, like the central bank and also the government, are working together to kind of, combat this inflation and make things a lot better, even though Bank of England's governor did come out and say that this recession is going to be a little bit longer lasting than they were expecting. That's the best case scenario. The worst case scenario is somebody who comes into the office, somebody who ends up replacing Boris Johnson, who is, a lot more liberal in the sense that they're putting a lot more money out into the economy, and pretty much saying that this is to help people, right? And we have seen that when you start making money cheap, things start to get worse, especially if you're already in like a super high inflation economy already. Whereas the Bank of England's going to have to be a lot more aggressive than they're actually planning on to be. So that's the worst case scenario, right? That starts to slow things down because there's a lot of balancing that has to happen in between. So here we have Liz Truss. So she is set to become the UK Prime Minister this week with her plan to turbocharge the economy by slashing taxes, already worrying investors, and double-digit inflation. So there you go. That's something that, we're seeing happen in the US right now too. For example, Biden's administration coming out with laws, coming out ways to increase taxes and try to make money from increasing taxes. So when you're looking at the Inflation Act, for example, that's one of the ways that they're making money. And so it seems like on Monday, the Conservative Party members are expected to name her as their leader. And so expect a little bit of more volatility. If you're really not sure on how your certain pair reacts to, political news like this, kind of go back and back test, for example, when Biden came into the office, right, in 2020. So how did the markets react around that time in January? That would be one way. So go back and back test, any political news around elections and things like that, and you will be able to get a better understanding of pretty much how your specific pair is going to be moving and reacting to that news, pretty much. So you already have a little bit of help when it comes to that sense, because the markets have already signaled a concern about a Truss primership as bond traders fret that a flood of gilts may be too much to absorb, triggering higher debt servicing cost. So you already have a lot of market sentiment. It seems like there's not great market sentiment already with the news of Truss coming into the office. So that's one thing to watch out for. So Monday, pretty much political news coming out from the UK. And then we're going to go ahead and move on to some central bank news. So we know that ECB, for example, was very slow. We talked about it in our last weekly outlook, and I believe on our Friday session as well, where ECB was very slow when it comes to increasing interest rates. And again, it was because of all the different fundamentals and all the different economic events that were happening and that Europe was pretty much dealing with at that time, including the Russia-Ukraine war, the side effects of that. So you already had inflation from the pandemic, you already had inflation from the near zero interest rates, and then the effects of the Russia-Ukraine war when it comes down to energy prices and gas prices and everything like that. So they're combating with that, and then obviously still trying to recover from all the economies that were locked down that are opening up, but now they're kind of struggling to find this balance and coming right back to like the pre-COVID normal, quote unquote. And then finally now starting to increase interest rates, and what is that going to look like in the bigger picture of the economy when it comes to living cost and higher energy cost and everything like that, right? Inflation for the consumers and how they're going to be reacting. So as we continue down here, we see that just a quarter point of interest rate hikes is all that separates the European Central Bank's two key options at this week's decision. So this week, we are going to get interest rates from ECB coming out. So now here, the discussion is, are we going to see that half basis point hike, or are we going to see a 75 basis point hike that's going to come out of ECB pretty much? that a lot of the central banks, including Bank of England, including the Fed, have been doing. So they have been aggressively increasing interest rates by 75 basis point hikes since the beginning of the year, and then slowed it down to half point, in between. And that's pretty much what the sentiment is to end off the year. Can we continue the 75 basis point hike, or are we going to drop that down to half point hike? But we do know that there's going to be interest rate hikes because that's what a lot of the central bank officials, including Powell, had said at the Jackson Hole conference. So that's going to be another economic event to pretty much watch out for. And again, the same sentiment here as any other central bank, as any other economy, that as you continue to increase interest rates, there are concerns around a recession. But now the question is, how long is this recession going to be, and what are going to be the next steps from central banks to pretty much combat the inflation and kind of help the economies move into more like an economic growth rather than just sitting in a recession, basically. Let's continue on to Germany here. So Germany takes aim at cost of living crisis in a 65 billion plan here. So here we know that, same thing, European Union as a whole, all the countries that are part of it, are dealing with higher living costs, are dealing with, concerns when it comes to households and consumers about what to expect going into the end of the year, as, winter's going to be rolling around, and obviously you need energy for heat and everything like that, and they don't have much of that supply. Again, 40% of their supply is pretty much coming from Russia, which they're trying to cut off. So how are you going to make up for that 40%? The U.S. is stepping up. You have the U.K. that's also stepping up. There are special task forces that are dedicated to this specific event to help them, to help Euro with the energy crisis here. But obviously with that, it seems like the German Chancellor agreed on a relief plan worth of about 65 billion euros to help millions of households struggling with soaring prices. But now think about, what is that going to do when you're looking at the overall inflation? So what does this relief plan essentially look like? Are you just putting money out there for people, or are you pretty much, incentivizing, for example, the energy companies and the gas companies in one way or another to bring down their prices because we know that they've increased their prices, and we saw like massive profits that they've reported as well because of the high prices. So essentially, what is this going to look like, and how is ECB going to be combating this, with their policies? Because we know that Germany is the largest economy of the entire EU, and obviously whatever they do is going to get trickled down to the neighboring countries. And what was that? So whatever they do is obviously going to be trickled down to the neighboring countries, and they're going to try to follow suit if they do end up seeing this work. So if, as a whole, the entire EU ends up, doing these relief plans and making, again, money a lot cheaper for the people, essentially, how is ECB going to be coming out and combating that? Because all of this plays into inflation. The longer you do this, the longer this problem of inflation is going to linger, right? And the quicker that you kind of get a hold on it, the quicker you're going to be able to pull yourself out of this inflation issue and also recessions.
Yep.
Now moving on to the economic calendar, and then I'll pass it over to Stefanos. So this week, starting off today, it's quite easy. You don't have any high impact news coming out, so Asian session is going to be quite easy. Going into London session tomorrow, a lot of Euro news coming out. These are final services PMI. So a lot of this has already been priced in for the most part because of the flash manufacturing PMI. The flash and anything really when you're looking at, if there's different parts of the same news coming out, for example, the advanced GDP, then you have the prelim GDP, and then you have the final GDP. The advanced and prelim tend to have a lot more effect than the final. Same thing with the PMI. The flash PMI tends to have a lot more impact than the final here. But this is still very important, right? Because you got to take a look at this and you'll understand what's pretty much happening in the economy, what's the state of the economy. If you start to see numbers kind of fluctuating, understand that, they are sitting in this, either it's getting better or you're moving towards to like a more negative news coming out, right? And in order to understand that, you got to take the entire picture into effect. So what's happening with the consumers, what's happening with businesses, what's happening with the retail side, the manufacturing manufacturing side, everything like that. Are there more consumers taking out loans? Are there less consumers taking out loans? So all of that's going to give you a better picture of the entire economy. So if you're trading London session, you don't have a lot of high impact news coming out just tomorrow. And so, you could kind of take it easy. Don't try to overtrade. Don't try to force any trades. You have the rest of the week because, as you can see, as we start to scroll down, things do start to pick up a lot more. You got the OPEC meeting coming out, and the sentiment for the OPEC meeting is that they're going to be cutting on the supply because they had their meeting, and the last meeting that they had, and the sentiment there was, in order for them to put out more supply, they need to see more demand, and they're really not seeing demand like that pick up as a whole, right? There are certain parts when you're looking at, for example, the European Union. Obviously, they need a lot more supply compared to a lot of the other countries. But again, OPEC's going to make a decision based off of like global demand, not just specific countries. And then tomorrow is Labor Day in the US, so you do have a bank holiday when it comes to Canada and the US. The chances are there's not going to be a lot of volume there. So if you're trading New York session, again, you want to take that very easy tomorrow. And then you have the PMC member speaking. So really the volatility is going to come from Liz Truss taking over the office tomorrow. And so that's going to be pretty much your big news to trade when it comes to the financial markets. If it's your first time trading any sort of elections, kind of live back test it, do paper trading and things like that, and take note of the volatility and the different volume and the different sentiments in the market. And then you have the interest rates pretty much kicking off with Australian dollar here. They are expecting an interest rate hike. So same thing with a lot of other central banks besides Japan, pretty much, who is still maintaining their negative interest rates. And then going into Tuesday, you don't have much coming out from London session, but things do start to pick up a lot more in the US session, where you have the final services PMI and the ISM services PMI. So here, if you start to drop below 50, that does indicate contraction. So that does mean that the services industry as a whole is starting to contract a little bit. That means that there haven't been a lot of sales, and that means that they're not making a lot of money, and that also translates into essentially not putting out a lot more orders onto the manufacturing side, because if you're not making a lot of money, if you're not selling your products, things like that, why would you be putting in more orders on the manufacturing side? If you remain above 50, then that means in industry expansion, you're making pretty good money, right? And you can put in new orders. You can essentially maybe increase prices as well, maybe come back and hire more people, employment. So all of this is being affected. So as you can see, it's a lot of different parts of the economy that are being affected here. So this is why it's very important to kind of pay attention to this economic data as a whole. Then you have GDP news coming out from Australia in Asian session. After that, quite easy, rest of the Asian session. And then also London session on Wednesday, but you have the monetary report hearings on Wednesday's London session from the UK. So that's one thing to pay attention to. The next interest rate news is from Canada on Wednesday. So another, great economic event for you to trade. As you continue down, the euro interest rates come out on Thursday. So Thursday is going to be very interesting because you have Powell speaking. You also have the press conference from the ECB, and you also have interest rates coming out. So they are expecting another hike here, a little bit more aggressive than what the market's really getting ready for. But the chances are that leading up to this news, because we already have the forecast number here, you might get some pretty good trading opportunities when it comes to the euro. As the market gets closer to the news release, it tends to price in the forecast, and then you'll see a little bit of more volatility as it compares the actual versus the previous. Then to end off the week, you got employment change coming out from Canada, and then you'll have some FOMC members speaking. But other than that, it's going to be quite an easy day. So really your important days to trade are going to be on Wednesday and then also on Thursday. If you're trading New York session on Tuesday, then you can trade the ISM services PMI. But today and tomorrow is going to be very easy in the markets because you got some bank holidays, you have very low impact news coming out. So just take it easy because you have a lot more opportunities lining up for the rest of the week. Over to you, Stefanos. Go for it.
Awesome. Very informative. Does anyone have any questions on YouTube?
Nothing yet. Tony, how's it going? Tony said howdy.
Tony?
Yeah.
Tony normally checks in, doesn't he?
Yeah.
He's usually regular. What's up, man? Hope you're doing well, buddy. All right, so let's get into the charts. Obviously, we have NFP, which has been done, last week. So we are in the beginning of the month, but we should be getting some nice moves this month. As Sharma broke down the economic calendar, or this week, we should be getting some nice moves this week. But we'll see what ends up happening. But starting with GJ over here, looking at the current monthly candle, previous one closed bearish. Current one right now is tapping into 162,500 area and now flipping bearish over here. So are we going to continue down after forming a lower high and a lower low on the previous candle over here, right? Can this candle create that top wick, flip bearish, and continue down and possibly fill that wick over here? Now, we do have weak monetary policy coming out of Japan. Great Britain is not in a good state when it comes to their economy, as is Europe or pretty much the global economy right now. So could this continue to consolidate in this area as we've been seeing, or are we going to get some possible move down based on what's going on in Great Britain? But we know that Japan has a weak monetary policy, so it's pretty much given that we're not going to be going too far down. So looking over here, kind of some wacky candles the last few weeks over here. Long wicks, smaller bodies over here. Previous candle ended up closing like or right over here, ended up closing like a doji candle over here. And it looks like we're trying to hold some kind of a support in here around like 161, which I normally have marked off. We also have 166 over here, which I normally mark off as well, where we tapped into these yearly highs up here. Tool tapped into the yearly highs up here, and ever since then we've just been making these lower highs and lower lows, but rejecting 166 over here multiple times with these candle body highs, and then these wicks to the left as well. Now coming into this area, we can mark off 161, because as you can see, we keep rejecting that area to the left here with all these wicks. You had that rejection. This candle ended up pushing all the way over here and closed right back below that level over here, right where that candle ended up closing as well. So are we going to hold this as a support and possibly continue back up, or are we going to be able to break through 161 and continue down to fill some of these wicks, or mirror this weekly clean move to the left back down to 158? Looking at the daily over here, we can draw our trend line. As you can see, just been pushing down from that 166 level. Just gonna draw a nice zone right here so you know how significant it is. We ended up making that last push coming back down into 161. We retraced back up to 163 200, where we ended up holding a previous support over here to the left, and you can also drag that to the left as well, as it's a significant area to mark off. So right now we keep rejecting that area, and then we're also, since rejecting that area for the first time, we've also been making these lower highs over here. So this all right now is just one big range, right? And it's very tough to be taking trades in here on scalps. This typically isn't where you're leaving runners or anything like that. If you're taking a quick scalp, you're pretty much securing right where you typically would. You would secure a majority of your position, if not the full thing. But right now we keep rejecting. The other day, in the beginning of the week, we ended up getting this bullish candle close, pretty strong bullish candle close off of 161, pushing up. This candle retraced it, and then we corrected the entire move coming back here. Held support again with this candle, and then again, tapped into that area, formed a lower high, and flipped bearish and closed bearish over here. So is the next candle going to create that top wick somewhere here, and then be able to push through here once we get some of that New York volume, maybe tomorrow? We do have a U.S. bank holiday, so maybe we don't have enough to push us through there, but possibly this week we could push through and continue back down to this level right here where you have this wick.
I think the major event for this one specifically might be Truss coming into the office.
That's a huge one.
Yeah.
I mean, any kind of political move other than interest rates is probably the biggest mover for any kind of currency.
Yeah.
Yeah, so that would push that through if that was the case. So right now, again, we're just kind of consolidating. You have these lower highs. You also have these higher lows, like these ascending bullish channel over here. But again, it's just like a flag. You don't really have to put that there. It just gives you an idea that it's hard to trade in that. Looking at the 4-hour, again, you got 161, that psychological level, which is holding. Right now, this 4-hour candle did close bearish with a wick to fill. So can we continue down and continue through this area again? Like we were just saying, 160, I would actually just mark this off. Something like that. I'll just mark off 160 like that. So 160 will be our next target once price continues down. You have this wick over here, and then you have the support over here to the left that you got to be aware about. So these are a little bit cleaner moves over here to the left, but again, it's very difficult to trade in here. You've gotten bounces. We could very well be holding a support right in here, consolidate, and then start to push up again, and again form some kind of a lower high to continue back down. Or can we break through that area and start breaking up? But right now, it's all just consolidation. So I would just be aware in here, and I would be cautious of trading in that. You don't have to. That's why you have that secondary pair, so that you could be concentrating on that one, like gold, right? Gold can be that, but any of your other pairs. 1 hour, same thing. 1 hour, you are holding some kind of a support. You have this whole area right here that is held as a support and resistance multiple times, that we could end up coming into this area, holding as a resistance when market opens tonight, and then continuing back down to that 161 area. Or we could close above it, possibly hold support in this area, and continue back up to retest our highs up here. Anywhere in this area. So we just keep projecting it. Alright, but we really don't know what's going to happen until the market does open. That's why it's a little bit easier to break down on Monday, but again, we need to have that breakdown on Sunday so you guys get a good idea of what to expect for the week and set your week off right.
Before we hop on to like a different pair, real quick, just for GJ, it's a daily consolidation. When you have seen it on lower time frames, when price does end up consolidating, there tends to be a lot of volume that follows, right? So if you saw like a 15-minute, 30-minute consolidation, you've seen great volume follow. Just imagine that this is a higher time frame, daily time frame that's consolidating, and so imagine the volume that will follow. And again, I think the big news here is going to be trust coming into the office and pretty much the market reacting to that. Obviously, the market hasn't been taking it in a very optimistic way, but it really depends on the outlook that Truss has for the UK, for her term, and what's going to be happening there, and how's that going to be affecting the economy. As you can see from a technical perspective, if you hop back up to the daily time frame real quick, Steph, as you can see from a technical perspective, you're already getting hints of where price might be headed, right? But you want to be very careful in the sense that, Steph has already marked out the lower highs that are being formed for you guys. But obviously, these are your hints that the market's really not taking this in an optimistic way. They are expecting that the UK is probably going to get weaker for short term until we bounce off of, those higher time frame levels, maybe weekly and monthly levels, do some corrective moves, and then continue pushing back up. But at the end of the day, when you're looking at the bigger picture, when you're looking at the monthly, weekly time frames, it's also important to understand that right now you are at a very key level. If you have, any time frames higher than the monthly time frame, if you have like the TradingView Pro or whatever it is, go up to the quarterly time frame, go up to the yearly time frame, and then go ahead if you can do that.
Of course.
So look at this key area that price is sitting at right now, right? And how price has reacted here previously. So this entire level right here, as you can see, is a very important level. You've got rejections here. Price has sold off, right? You've got a nice bottom wick rejection and then a massive push up, pretty much coming to the last high that price ended up making in like around 2015 when Brexit news came out, and then pushed right back down. That is what we're coming back up and revisiting. So it's very important to understand that you are in a very important level until this part right here. So just the current quarterly, bottom wick rejection right here, and then extend it over to the left, and you'll see how that is also a support. So this is why It's very important to be patient. There is a lot of consolidation at these levels for this very reason, because you are sitting at these higher time frame levels. So be very patient. Look at that technical, analysis. Take a look at the hints that technical analysis is pretty much giving you when you're looking at the daily time frame, when you're looking at the weekly time frame. So if you can, what I've personally done is just marked off the daily time frame consolidation as a no trade range, and then as soon as price breaks out of it, then I'm looking for a potential trade opportunity, below this area, or if price continues pushing up, then look for a trade above here and then continue pushing back up. But all of this in between for me is a no trade range. But you are getting the hints that price is going to be moving in one direction or another here, which is these lower highs being formed. So I hope that kind of clarifies things for you guys going into the new week.
Yeah, absolutely. I mean, if you guys are scalping, you'd be looking at this range if this is on the 30-minute or the 15-minute or even the hourly, and you'd be like, I'm not going to trade in that, right? I'm going to wait for price to break out, either out of the resistance and continue up here, or out of that support and continue there. So you might as well just wait, right? Especially on the higher time frames. It's just a lot of mess. It's a lot of noise. So you're better off having that secondary pair like we were just talking about. But those are all great points when it comes to the quarterly. I don't often look at the quarterly, right? It's a good tool for you to use as far as like those levels that you were just talking about.
Yeah.
And obviously every quarter we have a lot of changes, so that could definitely be a nice tool for you guys as well if you guys want to pay more attention to that. But yeah, current quarterly candle right now is bearish. Could we be flipping bullish and continuing up? But like you were saying, any kind of uncertainty in the market when it comes to political powers and change of powers and stuff like that, it creates all that uncertainty. So that could definitely be what's going on over here in the lower time frames with those lower highs.
100%.
All right, moving into gold. Gold on the monthly over here. Last monthly candle ended up closing a bearish candle, strong bearish candle as well, but with no bottom wick over here. Now we're tapping into 1680. As we did over here, right? We created this wick, ended up rejecting it and closing all the way back above 1750 a few weeks ago. Then, now this candle ends up closing all the way in that area, but with no bottom wick, right at this level, somewhere around here. So can we end up holding a support in here and bouncing up off of 1680, as that's a high demand area, and we're also abiding by this trend line over here. Price is just kind of on its way up over here, but again, the U.S. dollar is extremely strong right now. It's probably one of the strongest currencies, if not the strongest. We are pushing up over here. They are very hawkish when it comes to their sentiment with raising rates. So we should be continuing down. We should be continuing through 1680, but don't be surprised if we're going to get some kind of a bounce here and then continue back down. Maybe we end up retesting 1750 and then continuing down, but we got to see what ends up happening with the raising of interest rates, and if it really sends us into an even worse recession or maybe even a depression, this thing will be bouncing off 1680 and continuing back up. It's a very odd time when it comes to fundamentals in the market and what we're going through right now, where you're tightening monetary policy during a recession. Like, that doesn't normally happen. So it sends a lot of these pairs out of whack a little bit. So here you see, since the invasion of Ukraine, we've been creating these lower lows and lower highs based on the Fed getting hawkish and increasing rates. We came down into this very key area of 1800, which is obviously a psychological point right here. Previous support as well, right? And price ends up bouncing off that area, coming all the way down into that 1700 area, where price is now kind of bouncing off. I'm actually going to mark off 1700 as well. Because, yeah, I know you have candle bodies to the left over here, right? And you got previous rejections of 1700 as well. And as we know, last week we failed to close below that level, coming back down into 1680. Looking at the daily now. Daily candle ended up holding a perfect support in this area, 1700. Right? So we got a solid bounce, a solid, strong, bullish candle close right here. Can we expect, this is much cleaner price action, by the way, too. So can we expect something like we got over here to continue back up, maybe a little pullback, and then price continues either into this area, back into 1750, or can we continue back up somehow, breaking this bearish trend? I don't think that's going to happen. I think maybe we'll get that pullback into here, and then we'll end up continuing back down to these levels over here, if that's the case. But we could definitely play something over here because we got a higher low and a higher high and a strong close here last week on Friday. And I know the stock market closed out not as they wanted it to. All right, so now we're getting that bounce. We're coming into a previous resistance, which we could kind of mark off right here. Got a previous support as well to the left. But right now, the previous 4-hour candle ended up closing bearish over here and holding some kind of a resistance and rejecting that level. Don't be surprised if we continue up here and we're just getting a pullback down to continue back up, with further fear in the market, but also that high demand area of 1680, 1700, all in these areas. This is where a lot of profit taking is possibly being taken place. All right, so we could definitely get that pullback into here. Looking at the 1 hour, last 1 hour candle ended up closing bullish right here. So far we are holding some kind of a support. I don't know if I'd be trading in this, but maybe I'd wait for a safe break above this resistance over here to possibly continue up from there. Right? It's a little choppy over here to the left, but I think if we do hold some kind of a support in this area, we should be continuing up to like that 1740 area, and then possibly, like I said, continuing right back down. But if that doesn't happen, if we don't get that pullback and price keeps continuing down, can we get some kind of sells coming back down into 1700 and continuing down from here? Because that's obviously the main bias, right? So you have like a clean move here around like 1692, right in this area. Just gonna clear this out because it gets a little messy. That 1700 there, but 1692, you got a little bit cleaner price action over here to the left, coming back down to fill this wick over here around 1680. So just mark that off right there. Very clean move. Once you break that, you got about almost 100 pips. You got about 90 pips there. Not to mention, like, you could definitely grab sells from here, right? I'm not saying you don't want to wait for sells until you break here, but I'd definitely be waiting for a retest of that area. I should just want to zoom out real quick and see if we have any valid trends. Yeah. So now, like I said, you got that bearish trend that we've been following over here. We created this new low, pushed all the way into this area, previous support and resistance. Now, can we hold support and break this current bearish trend? And then these will be your safe buys over here. If not, you got safer sells coming down into here. You got an alright range right there, but you can definitely grab something. But then this is going to be really safe sells coming back down to 1680. Does that make sense, guys?
100%. So here, when you're looking at the different time frames, as you saw Stefanos going through the different time frames, you will see how the trends tend to change a little bit and the structure tends to change a little bit, right? But here the key is pay attention to the higher time frame structures, the higher time frame trends here, so then you can catch those scalps that will be turned into swing trades. Now here, the reason why every time frame has a different structure is because the lower time frames have to work together to fulfill the higher time frame structure, right? So if your higher time frame structure on the daily time frame is bullish, for example, then when you drop down to the hourly time frames, you will see price creating those, higher highs and higher lows and everything like that to fulfill the higher time frame, which is the daily time frame bullish structure. So this essentially be this retracement that we're looking for here for the daily time frame to bounce off of some particular level and then continue pushing back up. So it's very important to keep the higher time frame picture in mind when you're looking for trade opportunities here, and be very patient. Be very patient.
Oh, I'm sorry.
No, that's all. I'm just saying, just be very patient with your trades.
Yep, absolutely. I was just saying, with that daily candle, the formation of that candle, it's a strong candle, right? Ended up breaking the high of the previous candles over here. But this, as you can see, was the top wick on the daily candle, right? So this could have just been the pullback for the next candle to maybe fake out over here, creating its bottom wick, right? And then all of a sudden, the daily candle ends up passing the high of the previous candle and pushing up from these areas. And then that's your trade if you want to counter trend this bearish market on gold.
100%.
All right, guys. So any questions?
So this week for the live session, do you want to do Thursday when the interest rates come out?
Sure.
All right, awesome. So
Absolutely.
This week, the live session will be on Thursday for ECB interest rates. The interest rates come out at 5:15, so do you want to do the normal time, which is 4:30?
Yeah.
Okay, so 4:30 a.m. PST, which is 7:30 Eastern time. We'll see you guys here on Thursday.
And Tiff, I know you just came in. This is gonna be recorded, so I'll be sending this over to you guys.
Perfect. All right, have a great rest of the week, everybody. As always, you guys have any questions, always feel free to reach out to either of us. We'll be more than happy to help you out. But we'll see you on Thursday. Wednesdays, if you guys have us on Instagram, Wednesdays we're doing like a check-in kind of a thing. So if you guys have any questions about any of the trades, weekly outlook or trading, psychology, anything like that, just hop onto Instagram with us and, we'll answer the questions and we can have like a discussion or anything like that. So hopefully this is going to be helpful. Wednesdays or Sundays during the breakdowns with you guys before the market opens up. Wednesdays like a quick check-in, and then Friday we try to do simulation sessions.
Absolutely.
All right.